it is surprising that so many young option traders don't even think twice about it. And to me, that was one of the first like warning signs, like, oh, why would he bother trading that when the spreads and the liquidity is just not there? To me, that's something that really stands out as an option trader when you look at something, now it's not as bad when you're just selling a covered call or cash secured put. You have a one-sided trade, but to me, I mean, I know they don't have to be super tight, but these unknown symbols with wide bid-ask spreads, I always say, why bother? So we definitely have a long conversation about that. And most don't really even realize until I've got so many people that come back to me and say, yeah, you were right. It's like a roach motel. They let me in, but then I thought I was making money on this trade. I could barely get out at break even.
Hello, wealth builders. You're listening to Wealth Building with Options. Here's your host, Dan Passarelli.
Hey, wealth building family. Welcome to episode 56. Wait, what about Alice? But before we jump in today, let's talk about how you can get the most out of the Wealth Building with Options community. First, make sure you're subscribed to the show on your favorite podcast app. You don't want to miss anything. And if you're already subscribed to the show, you can go even deeper and get more out of what we talk about with a paid subscription. With your paid subscription, you'll get video extra podcast episodes so you can get hands-on video training on things we talk about on the show, subscriber-only posts where I'll drill down on a stock, event, or trading opportunity and share trade ideas. You'll get all my covered call and cash secured put trades that I'm making in my real brokerage account. You'll get access to our monthly online Ask Me Anything webinar. And you'll get our unusual options activity alerts on options income trades like credit spreads and so much more. And the best part is your paid subscription helps keep this show on the air. To become a paid subscriber, just go to the Wealth Building with Options Substack page and sign up. The shortcut to that page is wealthbuildingpodcast.com. That's wealthbuildingpodcast.com, and choose a monthly or annual subscription, or for the best value, become an all-in wealth builder and get everything I mentioned, plus our Friday group coaching, our smart income video class, and get on the wait list for a signed copy of my new book, Build Consistent Wealth with Options, scheduled for release on April 28th of 2026. Today's show is all about liquidity. Liquidity is the ease at which an asset can be traded without affecting its price. And liquidity ties into a lot of the things we've been talking about lately on the show. How important is liquidity? How do I measure it? Can it be a deal breaker? Yep, we have a lot to cover today. And so I decided to bring in some reinforcements. To help us talk about liquidity today, I want to bring on someone who's helped hundreds, probably thousands of investors to use the wheel strategy. He's a frequent guest and a good friend to the show. Please welcome John Kmiecik. Hi, John. Welcome back to Wealth Building with Options.
Good to be back.
So you are still hanging out in Florida?
I am. It's been beautiful. So, I mean, as I'm looking right out the window, I'd rather look out the window than stare at you, but it is motivational. I mean, I see the ocean out there, I see dolphins every day, but honestly, I look back at it as a motivation for a trader, and not getting hokey on the psychological aspect of trading, but it is give you motivation to be successful at this. Again, as I always tell people writing their trading plans, whether it's cash secured puts, covered calls, have a trading plan in place and have goals, set them for yourself. And I always try to steer people away from the monetary aspect at first, but clearly looking out the window, this gives me motivation to maybe not Florida, but definitely a possibility, but to have like a second place to enjoy when the weather's cold in Chicago, which we know, even though it's been unusually warm in Chicago, right, and stuff, but we know that's just a glitch though. But honestly, it is motivation to succeed at this stuff and be disciplined and do the wheel strategy and accumulate wealth too, so you can afford a place like this. So it's kind of cool.
Yeah, that is great. And you're in it's Tampa. You've been staying in, right?
St. Pete's Beach. So yeah. So it's just right on the water, and it's in a residential area, so on and so forth. And it's really, you're like 10 minutes away from everything else, which I like about it.
Every time we go into that area, I think it's actually Clearwater Beach for this place. Have you been
Okay.
to Frenchie's Rockaway Grill?
No, but people have recommended that place though.
Oh,
So it's funny you said that though. So yeah,
uh,
Amy's girlfriends are coming in. So that was one of the things she looked up as a possibility to go there. It's funny you mentioned that. I just been treating my wife to Olive Garden and McDonald's. So we'll go out somewhere nice soon enough though.
all right. Well, okay, let's talk about liquidity. I think sometimes newer option traders don't fully think through liquidity and how important it is. How do you explain the importance of liquidity to students?
No, I agree with you that because funny, and I'll bring up more as we talk here today. I just had this conversation with a student today. But to me, when I first got into the retail aspect of option trading, it would just jump out at me. The liquidity combination of the bid-ask spreads. And I was fearful. I'm like, why would I want to trade that? But it's surprising how many students that don't even think about that, to your point. And it's just crazy. Well, they'll show me something. And as I always say, not that I know every symbol out there, but if I haven't heard of it, that's the first thing I go is I look at the liquidity, the open interest, which is not always perfect that the bid-ask spreads are going to be wide if the liquidity and the open interest is pretty small, but it usually is a good telling tale for it. But if they give me a symbol I've never heard of, and she gave me two symbols that I've never heard of, and it's the first thing I shook my head, and she looked at me. She's like, "Why are you shaking your head already?" So I'm like, I know what's coming. Let me get to that before I make a comment about it. And of course, they were awful. They were awful to begin with. So, but back to my point, but it is surprising that so many young option traders don't even think twice about it. And to me, that was one of the first like warning signs, like, oh, why would he bother trading that when the spreads and the liquidity is just not there? To me, that's something that really stands out as an option trader when you look at something, you know. Now, it's not as bad when you're just selling a covered call or cash secured put. You have a one-sided trade. But to me, I mean, I know they don't have to be super tight, but these unknown symbols with wide bid-ask spreads, I always say, why bother? So we definitely have a long conversation about that. And most don't really even realize until I've got so many people that come back to me and say, yeah, you were right. It's like a roach motel. They let me in, but then I thought I was making money on this trade. I could barely get out at break even. It really is. So I always say that as teaching this stuff, I'm like, not that you don't believe me on things, but when you really experience them yourself, that's when it really sinks in. Like, all right, not that John or Dan were lying this whole time, but now that I see it for myself, I understand exactly why they brought this topic up and why you don't want to be stuck in illiquid trades for sure.
So when we talk liquidity, what are the metrics that you use to measure liquidity?
I don't know if I really use metrics, unless you call the eyeballing effect here. But really, to me, it's the combination. I mean, probably, I'm not going to lie, the first thing that jumps out at me is the bid-ask spreads. And then, of course, I look at open interest and volume go hand in hand. But I think just like the technical analysis part of me, I look for horizontal support and resistance more than the trend lines first. That just catches my eye. And I think the same principle applies to the options. I look at the bid-ask spreads and I go hand in hand with looking at that. And especially like my student today had 1,000 shares of something. Now, clearly, when it's not heavily traded, aside from the bid-ask spreads, it might be more difficult getting out of that trade. So for me, really, that's what catches my eye. But as I said, for the most part, which you know very well, it kind of goes hand in hand. In liquid trades, you're going to get those wider bid-ask spreads.
Yeah, that makes perfect sense to me. I mean, I will look at volume and open interest also, like you said, but it's kind of the proof is in the pudding. If the bid ask spreads are wide, you don't have to look at anything else. Like all the information is baked in there, right?
Yeah, she gave me these were like $2 and $3 stocks too to begin with.
Mm,
So one was Veru, VERU, and the other one's OM, which I never heard of. So that's immediately, like I said, there's me. Before
mm.
I even opened my mouth, I went there and looked at it, and I looked at the bid-ask spreads. And yeah, you can do it at home now, listening to this podcast. Take a look at those two stocks, OM and VERU. And I was just like, I shook my head. She's like, what? And like, take a look at this, right? And then she never even thought about it at all. And then I'm like, look at this one has volume of 5 and you want to sell a 10 lot because you own 1,000 shares of covered calls on this. I'm like, you got to be careful of that. I mean, the bid ask spreads stink to begin with. I don't think the market makers, even if they're computer, they're not going to be too generous to you trying to get out of that as well. They might even gouge you even more so at that point then too. But yeah, it was, like I said, for her, she's like, wow, I never even really thought about that because I know I see you in class and you poo-poo at anything that comes up, but I really didn't think it kind of applied to me, because I'm like, I thought it was kind of not like that. But she's like, I always know that, you don't like something, because you always say, I don't know if I would trade that necessarily. And again, that's just my personal opinion. But she's like, I kind of understand a little bit more when you kind of break it down in that manner, though, too.
If options on some specific stock are really illiquid, and maybe you have one of those stocks on the brain right now, will you still trade them? Like, is there anything that's just a deal breaker as far as liquidity is concerned? Like, no, I won't trade that name because of this.
Yeah, I mean, clearly, to me, I think I've said this before, though. I think over the years, I think volume and open interest overall has gone up, but I think there's just so many strike prices on underlyings, so many expirations now. I really truly believe the bid-ask spreads have gotten worse over the last several years. I look at stocks that I used to trade, like Win is one of them, as I call it, Winnie the Pooh. And I used to trade that, and they weren't super, super tight. But now I look at that sometimes, I'm like, God, the bid-ask spreads are so wide on this. I just think, too many expirations and too many strike prices have made it that way. So generally, I like to trade a core of my same stocks that I know are going to be pretty liquid here, the Apples of the world. And then, me and Dan had this conversation before we did this, talked about Comcast. And even at times, I'll look at Comcast to sell a covered call and it's not too bad. And then I look and it's like 5 cents by 57 cents. I'm like, where did this come from? It's Comcast is, somewhat heavily traded, it's not totally illiquid, but I've seen that on so many times. I've done cash secured puts and covered calls on Comcast, and it could look, the water's warm. Like even Florida, I look out there right now and it looks but the water is like 59 degrees. I wouldn't go in it. It looks so tempting. And then, once I got in, I'm like, yeah, that's why I'm not swimming here today. That's why I'm just going up to my ankles in here because it's too cold. I want bath water when I'm out in the water. And that's how Comcast is. It's lured me in a few times. And then I'm like, you know what? It's not even worth getting out of this. So a lot of times I'm holding the bag until expiration and letting it expire worth this because it's not worth buying it back because those bid-ask spreads have just gotten worse over time. It's crazy.
Yeah, I was thinking while you were saying this, why that is, and looking at the number of market making firms out there, because when there's fewer market makers, there's less competition. When there's less competition, markets get wider.
Mm-hmm.
I don't know. I think I have to talk to Henry Schwartz about that, get the solid answer.
Yeah, I honestly, that's why I say, I don't know if I'm making this up. This is just my thought process. But I look at so many stocks, and don't get me wrong, when I'm doing my group coaching class, I am scanning predominantly for the market is open. And we know, obviously, it gets a little bit looser than before the market opens. But I look at some stocks that I used to trade in the old days. I'm like, gosh, and I know I'm extra anal. Some people call me Anal Alice.
Wait, what did he just say?
Some people call me Anal Alice as when it comes to bid-ask spreads. But to me, I look at some of these things. I'm like, God, I would talk about this in class like 3 years ago. And now I look at this and I still will bring it up because it's your discretion if you want to trade that. I'll give you my personal thoughts. As I always tell you, I give you my opinions. It doesn't mean you shouldn't do, you want to do what you want. And I just try to give you enough information, which you do as well, to make your own judgment. But to me, I look at some of these things and I would not trade this now, but I know in the past I have. And the bid-ask spreads maybe weren't super tight, but to me, they made sense to trade. And now they really don't. And I just think it's just so many added strike prices and so many added expirations. So that's for sure.
Yeah. Yeah. I was looking at Apple and looking at all the new expirations that got listed on that as of last week, I guess it was.
Yeah.
And some of them, so what is it now? It's every Monday, Wednesday, and Friday, I think, right?
Correct.
Like some of the new expirations that were added, the markets are really wide, which honestly, I almost did not expect that because I don't know, you just figure it's Apple, like liquidity begets liquidity. If the markets, if you're going to trade this expiration that expires next Friday, one from next Wednesday, the liquidity ought to be pretty similar, I would think, but it's not.
No, right. But at least with Apple, it's not too bad for sure and stuff. But you could definitely tell for sure they have gotten a little bit wider since they started that. Yeah, I know. It was funny when we were doing class and I pulled it off. And actually, I was talking about a cash secured put on Apple at the time. And I'm like, shook my head. I'm like, am I seeing things? Is there a Monday expiration now? I didn't even notice Wednesday at this point, but I was like, yeah, I like did kind of like the Scooby shake and stuff like that. Like 2 Scooby stacks? No. I'm like, am I seeing things? And yeah, all my students like, no, I have it too. I have it too. And it was kind of interesting too. In class today, we noticed that NVIDIA is one of the ones that switched to Monday, Wednesday, and Friday as well. And NVIDIA announces earnings next Wednesday, but they didn't have a Wednesday expiration. So, which I thought that was pretty interesting, that just because of earning, and again, NVIDIA announces after Wednesday's close, why would they take Wednesday out? So there's a lot of niches on this, and clearly NVIDIA is a big cash secured put covered call candidate here. That's why the only reason I brought that up, that I thought that was interesting. I'm like, did they take away Wednesday for a reason? And someone in the chat room mentioned that they saw that happen on some of the other guys that announced earnings, but I don't know why they would make a difference though. Yeah, when most of the expiration is gonna be that Friday, which is the next expiration after their earnings announcement. I thought that was kind of weird. Did you even know they did that? It was kind of weird. They're just adding. I think OCC is just making up stuff as they go along now.
You know what? You reminded me. Yeah, I did know that. I kind of forgot. It slipped my mind, but that is one of the rules that they have for these. And I don't know if maybe they made that rule because SEC or whoever required it. But I think that part of it, if I'm not mistaken, I think that part of the rationale is when the market closes on expiration day, you can, well, if an option is in the money by more than a penny, they get automatically exercised. But you can override that. You can exercise stuff that's out of the money or not exercise stuff that's in the money, and you have to call your broker. And so if earnings comes out right after the close, they're going to get buried in phone calls.
Excellent point here. Yeah, I didn't even think about that because really there's no earnings Friday after the close, which would be, yeah, or anything that makes sense after that. So that's a good point. Yeah, I didn't even think about that. Yeah. Yeah. You're a very smart man. Thank you.
So. I just talk about this stuff too much. So, you know, I was thinking about this. Like I was thinking, okay, what are some things that John and I can talk about? And I don't know, I started thinking about how important is liquidity in a lot of ways, as we've just talked about. It's very, very important. But for me, sometimes I'll open a covered call or cash secured put position in even a pretty illiquid options class. But I only do that when I have the plan to hold it until expiration. So I'm only selling far below theoretical value or whatever on the way in, and then there's no exit trade. And I think that, well, I mean, first of all, do you do that sometimes too, or?
Yeah, as I mentioned, it absolutely makes sense because generally, again, they'll be usually a little bit fair getting in the trade, but you're right. You know, just like I said with Comcast, my intention wasn't to hold it, But then just because the bid-ask spreads and the liquidity got worse as I held it, I definitely usually let it expire worthless anyway. But that is a good point for cover calls and cash secured put traders. So as much as I poo-poo it, and I want you to stay away from that, but I definitely am a little bit more lenient on that front when you are just doing the one-sided trade. But to your point, it makes sense to, especially if you're going to get hosed on exiting that trade, it makes sense to take it all the way to expiration. That's probably the best way to kind of like even up the odds, so to speak. And if the market maker is going to shaft you on illiquid options, that's the best way to probably kind of even the playing field. So good call.
Yeah, you just have to know I'm not going to be rolling this. I'm going to accept assignment at a lousy price because I can't roll it.
Right.
But, I was thinking about it. I think it plays into the whole idea of that trading is personal. And like sometimes I'll look at one of these and I'll do the math on a cash secured put or whatever and say, geez, yeah, if I can sell this put at this price, I like that trade. That's a good trade.
Mm-hmm.
And then I don't really have to care about the bid-ask spread. I don't really have to care about, I'm giving up a bunch of edge to the market makers. It doesn't matter. That's good for the market makers, but I'm still trading at a price that makes sense for me. So
no, that's an excellent point though, right? I know you focus a lot on the return on equity on your cash secured puts and cover calls. Like if it's going to give me that price, yeah, again, do you want a wide bid-ask spread? The answer is absolutely not, right? But if it fits your criteria, fits your trading plan, fits your management plan, that's an excellent point. So you didn't want it 20 cents by 70 cents, but if he's going to give you 45 cents, that fits what you were looking for. That sounds like a great plan then too. So yeah, it's just, like I said, there's so many good things about cash secured puts and cover calls, and this is just one of them. Like I said, just to even the playing field. You don't have to worry. There's not a four-sided trade here that you have to deal with. That's for sure.
Yeah. Well, John, I know you have dinner plans, as I understand it, not Frenchie's Rockaway Grill, but somewhere else. So I should probably let you go, but I wanted to thank you very, very much for sharing your thoughts with the listeners. I think there were some really good things covered here. So thank you a whole bunch.
You're welcome. Yeah, like I said, just us bantering. It just, like I said, so many things at home as a young retail trader, and obviously using options as an investment tool. It just, like I said, it's just so relatable. That's why it's so important, I think, to have these discussions. Even, like I said, just us bantering. You gave me some thoughts going forward for my own trading here and stuff. So hopefully everyone listening at home or running the beach can get some tips from this as well then too. So thanks for having me again.
And that about wraps it up for this episode. But before you go, please make sure you're subscribed on your favorite podcast platform, whether it's Spotify, Apple Podcasts, or whatever it may be. And if you would be so kind as to leave a comment, I would surely appreciate it. Let me know what you like and what you'd like to hear more of. Until next time, invest excellently.
Options involve risk and are not suitable for all investors. Before buying or selling an option, read characteristics and risks of standardized options. A link is provided in the show notes. To learn more about your host, Dan Passarelli, please visit markettaker.com.